Hello, happy day after Valentine's Day. Hope you had a wonderful Valentine's Day yesterday. And today, of course, we're just moving forward with life, continuing forward, and just wanted to give you an update here on what's happening with the bond market and mortgage-backed securities in general. So, as you can see on the screen here, we have seen some decrease in the price of mortgage-backed securities. So, over the past few days, in fact, since last Friday in particular, and I'll show you this here, you can see that the price has declined. That means that interest rates have risen, I don't know, approximately a 0.25% since about a week and a half ago. And most of that, there's a couple of reasons for that. On Friday, we had a jobs report come out that was hotter than expected. It showed over 500,000 new jobs. Now, most of those were part-time jobs. There were less than 100,000 full-time jobs gained. So it's not necessarily the strongest report, but it looked like it on face value. Plus, there were some population controls that the government changed when they were creating this report. So those population controls boosted or inflated the number as well. So yeah, the goalpost got moved, right? A little bit on the data, which is typical, right, for the government, but that's where we're at. So that was a negative, a pressure point for bonds, as you can see here over the past few days. Now, since then, we had some more information come out yesterday on the CPI, and that's the Consumer Price Index. That came in lower year over year, but only 0.2% lower, and it was expected to be much lower than that. So that dropped, but not as much as the expectation. So that kind of tempered enthusiasm in the bond market. And then the core reading portion of that CPI is what the Federal Reserve pays attention to. That dropped as well by 0.1%. But again, that's less than the expectation. So yes, inflation is easing, albeit slower than expected or slower than wanted, right, at this point. So there's some concern in the markets that could give the Fed more juice or more impetus to continue to keep interest rates higher longer or increase them more than expected. So all of that pressure and concern has dropped the price of mortgage-backed securities, increased the yield on the 10-year Treasury, caused interest rates to go up a bit since a week ago. However, I'm going to show you some charts here. This will be interesting news for you to see. Now, one component of the core CPI is that there's about 40% of that that's a shelter component that goes into that reading, okay? And that shelter component is a lagging indicator because it takes people time, right? They're under contract for 6 months at least, right? Or 4 months before they make a decision. So as you can see here, this is not the CPI report, but what this shows is a different shelter cost indicator you can look at here. So it says this is the apartment list rent year over year. So apartment list is a way to capture more real time, more live data on the shelter component piece, which is so much. It's 40% of that entire core CPI reading. So it's an important piece. It so far has not crested, right? We have not seen the high because of the lag of it. So as you can see here, we're showing this year over year change was the highest point, right, back in January, and it's come down January 2022, and it's been dropping precipitously since then. But the lagging indicator, that's a year over year number, has not quite caught up to that yet. We're sitting right in this area, right, because there's a 6-month lag, et cetera, for rents, for people getting new leases, et cetera. So we're going to be cresting right about now, and we should starting next month with the CPI report and the core CPI, we should see that rental component, the housing component, start to drop and start to help decrease that year over year inflation number, which will help improve interest rates again. So, and we'll see even more of that, going forward. I'm going to show you another chart here. This will show you why May 10th is really kind of an important date when we're talking about replacement data. So we're replacing year over year numbers here, right, from last year. And as you get these year over year numbers replaced on the consumer price index, and then this is the shelter component down here, right, that you can see on this part of the chart. As you can see, we're going to start seeing some major differences, some major replacement numbers, because a year ago, the numbers were much higher for inflation. And as they get replaced with year over year numbers starting next month, and then especially May 10th is going to be a huge time where we'll start to see a big difference because that shelter component will be coming down as well in the year over year numbers. So we should still see some improvement in March for February's numbers, but big improvement beginning in May and going into the fall next year as well. So that's what we're seeing. Hang in there. If you're looking at buying a home, of course, It's still a good time to buy because interest rates are still a little high, right? But they've come down 1.5% since last fall. Sellers are still willing to negotiate because they're nervous. There's a lot more homes on the market that are sitting out there a lot longer. Take advantage of this time with seller concessions, with buy downs, whether they're temporary or permanent buy downs, and closing costs covered by sellers. There's a lot of reasons to be excited about buying a home right now, and a lot of reasons to make that happen in a way that's a lot easier than it was last summer or last fall. So if you need to buy a house this spring, don't hesitate. Don't be afraid to. It's a great opportunity to get a fairly good deal, right? A better deal than you would have last year for sure on the price, and negotiate to have a lot of, if not all, of your costs covered by the seller. Let me know if you need any help with that or have any questions about pre-approving. I've got a link here on this video that shows you how to get pre-approved. If you want to go through that process, it's a very simple process with us. We have an app called the Ascent app that just asks a few basic questions, asks you to upload a few basic documents, and I get back to you within 24 hours or less and let you know. And we'll have a nice discussion about what you can do. In the meantime, have a wonderful Wednesday. We'll talk to you soon.